Hello everyone. In this video, we are going to explore what happened with Nifty and Bank Nifty. Let's start with Nifty. Nifty opened slightly negative, but then that was the only candle that ended in negative, and after that, every other candle was making a new high and it started to consolidate at the higher levels. And you can clearly see that there is a level that was acting as resistance in the past and it clearly closed within that zone, which indicates a strong bullish upward continuation. But then, are we going to expect some sort of breakout tomorrow? It's not that simple. We might see some sort of gap up opening, seeing that trend continuation can happen. But then there are very strong resistance on the higher levels. So for now, it looks like a very good upward trend continuation. And what we can expect in this expiry, let's have a look at it through the FASP levels. So I'm going to show you the FASP levels. The FASP levels are at T7 is at 18,540 and T7 at the bottom is at 17,845. So these are the FASP levels. That's the extremes. And as a writer, what you can do is that you can take next week's expiry and then write T7 and T7. If you want to be a little bit aggressive, T6 and T6, you can go ahead and write. And as the market, gives any sort of breakout, and then if it continues to go higher than T3, then it's better to exit somewhere between T3 and T4. You can square off your writing positions because that's indicating a complete bullishness after that. And why so? Because we have seen multiple times it's getting rejected at T2 levels and the strong resistance is at T6. So once these levels are cleared, it will continue with the trend and having the view of budget in place during the first week of February, you can expect some sort of fierce upside moves. That's one possibility. But what could possibly also happen is that it can go till T2 and then come back, and then the expiry can happen somewhere between these T1 levels at the bottom to T2 levels at the top. So you can expect some 18,276 levels or 300 levels, I would say. So that should be the range. And now as a writer, if you're writing next week expiry, then you should be easily collecting some premium, right? And as a buyer, what you can do is you can wait, and as soon as it touches T1 level, which is 18,113, you can initiate some sort of CE positions. And even T2, you can go on to average, which is 18,072. And when you can exit, what could be the stop loss is probably when it breaks T3, because T3 is a very strong support, and if it breaks and goes below 18,000, then you should probably square off your positions and then see how it plays, because market has been within this range for so many weeks now, and it has finally managed to cross the higher side of the zones. So with Nifty, that's the story. There will be an upward momentum with a lot of support at T3, T2 levels. So anytime that you see at T2, T3 levels, you can comfortably initiate CE position. And as soon as it breaks 18,000, you may want to consider squaring off and probably wait. We never know whether it will go down or go up. Nobody can predict that, but we should have some sort of plan of our entries and exits. As a writer, you are still comfortable as long as it is staying within T4 levels on both the sides. You are writing T6 positions and then you're waiting for T4 positions to exit or square off, because beyond that you might enter into slightly negative portfolio. You don't want to really take chance, then you can go on to exit those positions. So only that is for next week expiry you can write, because tomorrow the premium will be very less for the current expiry. If you want to do intraday, then next week expiry T6 levels are good. So that's the story for Nifty. Now let's explore what happened with Bank Nifty. Bank Nifty again, gave a strong, downward move, but then it just tested the green zone, which we have drawn. Then it continued to rally up. And this is the level which we have shown, which acted as resistance. And if you have seen the past videos, I've mentioned that 42,630 is a very, very strong resistance for many weeks now. And the other level is 42,550. So 42,550 itself is a very good resistance zone, and breaking which you will have one more strong resistance at 42,630. And if it fails to breach these zones, then you can expect some sort of consolidation between these two levels for tomorrow, which is 42,200 to 42,630. That could be the range, and probably the breakout could be very, very fierce. It might happen on Friday, it can happen on next week Monday, so it can happen anytime. Whenever there is a momentum showing up with fresh triggers coming into the market, you can expect the market to break these zones and then have a trend continuation. But if at all there is any chance for upward continuation, then it should take this 42,630 levels and sustain above it and make newer highs. And particularly, it should cross T4 levels, which is 42,800, for any upward moves. And if it manages to do that, probably by the time this month expiry, or even by the month end, you can expect Bank Nifty to be somewhere trading around 43,500 levels, quite easy. But if it fails, then you can, this levels of support will be there, very strong support at T3, T4 levels, which is 42,200 to 42,148. If it breaks that, then you have a strong support at 41,800 levels, very, very strong support. And if that breaks, you can expect 1,000 to 1,500 rupees fall in Bank Nifty. So with that considerations, let's get into tomorrow's trade setup. You have T7 on both the sides at 43,095 and 41,800. So 863. So if you are a writer, what you can do, possibly you can write next week expiries, which is 43,000 or 43,100 on the higher side, and you can write 41,800 PE. Both the options you can write, and then collect the premiums for the rest of the day. And as soon as it breaches T4 levels, which is 42,800 on the higher side, it is clear indication that market is becoming bullish. You can probably exit before it runs into bigger losses. And don't try to average anything, just simply exit, because this is once it breaks and then directions are going to come, then writing is not going to work out for some time. So as long as it doesn't break T4 levels, you can continue to hold on to the writing position. And as a buyer, wait for the right opportunities. If there is a gap down opening at T2, T3 levels, it's a great opportunity for CE positions. You can enter in, and then keep one level down as stop loss and keep trailing the higher moves. And if you are finding the market to open at T2 or even T3, you can comfortably initiate a contra position T3 at T3 or T2, which is PE position. You can initiate and keep one level as stop loss, that is 42,800 as stop loss. And as it comes down, you can start trailing that, and probably you can expect till the pivot. So that should be the game plan. And once these levels are going to taken down, then you can expect some strong moves. On the downside, there is 1,500 points of fall waiting. On the higher side, you can expect some 1,000 points of move from current levels. So that's the trade setup for tomorrow. Wish you all a very fruitful expiry, and hope you all make some good money. See you all in another video. Thanks.